A close friend of mine invested about 6 lakh rupees in an insurance policy when the agent made a promise to him.
Sir, nothing would happen to your money. You'll make returns and your family will be protected with a lovely insurance policy.
Take a guess what happened. Not only did he get zero returns, he went on to lose 4 lakh rupees out of the 6. And the worst part, his family was not even close to properly insured. The insurance agent let him down. You know why? Because of this one terrible practice that happens in the Indian financial sector. This malpractice I'm referring to is misselling. Today, we break down what that is and how you can protect yourself from it. My name is Aaditya Iyengar, CFA. Welcome to Personal Finance TV. Misselling. It's when a salesman such as an insurance agent sells you a policy that isn't good for you that makes them the maximum commission. Or maybe a situation where your bank RM forces you to buy a bunch of insurance policies in order to successfully process your home loan application because they have sales targets to meet. Basically, every time you are sold a financial product without proper disclosure or straight up lies, it is misselling. And you know how bad it is? It costs Indians crores of rupees every single year. In fact, look at the data. In 2023, the Indian government reported that 2,15,569 grievances were registered on the Bima Bharosa portal. And these are just the registered cases. Here's something even more shocking. The financial advisory platform One Finance magazine did some research and they surveyed 1,655 bank RMs. And the findings showed a depressing landscape. More than 85% of these RMs didn't know the difference between direct and regular mutual funds. This difference, by the way, costs investors like you and me 2 times in fees. And that's not all. More than 98% of these RMs didn't know the difference between nominal return and real return or inflation adjusted return. 59.30% admitted to being given unrealistic sales targets which made them lie to their customers or not properly disclose the nature of investment products. More than half of them feared getting fired if they didn't take the route that required them to say anything to sell a product. Now there are 2 big reasons why this happens. Number 1, these products are high margin. And number 2, as a consequence, they offer the highest commission to the middleman selling them to you. Let's look at the data for the ratio of commission income to total income of banks. It went up significantly for some of the top Indian banks in the last 20 years. Now you know how insurance, banking, investments are full of complicated words? There's a lovely line in the movie The Big Short. Does it make you feel bored or stupid? Well, it's supposed to. Wall Street loves to use confusing terms to make you think that only they can do what they do. Or even better, for you to just leave them alone. And you know how everyone on social media says do your own research before taking any financial decision? Let me give you 2 choices and you'll understand exactly what I mean. Let's say you are 21 years old and you have a 10,000 rupee monthly budget for everything, insurance, investment and so on. Now, you could either give all of that to an insurance company and get an all-in-one insurance product to insure your family for 10 lakh rupees and have about 1 crore at retirement. Or you could buy a term life insurance policy for 1,000 rupees per month and insure your family for 1 crore rupees. And after that, use the remaining 9,000 rupees from your monthly budget to do an SIP and have 6 crore rupees at retirement. Now, obviously, anybody would choose the second option, right? But guess what? Most people in India choose the first option in the real world. This happens primarily due to misselling. As human beings, we don't want to do the hard things like buying insurance or figure out an investment plan and keep changing it over time. And that's why we get attracted to these products that are labeled as all-in-one. And many such all-in-one products exist that are high margin for a bank or an insurance company and offer the highest commission to the agents or the relationship managers. This is how it's marketed. There's an insurance policy that also doubles down as a mutual fund investment. You pay a monthly premium to the insurance company and the insurance company simultaneously invests this premium in the stock market. Now, God forbid something happens to you, your family gets paid the cover amount that was assured to you. If not, you get a handsome mutual fund portfolio at the end. But in reality, the odds are stacked against you. I'll explain how. Typically, these products would only give you coverage that is equal to 10 times your annual insurance premium. So let's say you pay 10,000 rupees or 1.2 lakhs yearly. The maximum coverage that you would get in most cases is 12 lakh rupees, which is literally nothing. Do you think a family would be secure with 12 lakh rupees after the untimely death of a sole earner? A general rule of thumb is to insure your your family for at least 15 to 20 times your annual expenses. So let's say there's someone who spends 50,000 rupees monthly at the family level would require at least 1.2 crore rupees as an optimal cover amount. Now, term life insurance gives you this kind of coverage for as low as 1 to 2,000 rupees a month. In fact, a 25-year-old can easily get a 1 crore life insurance policy for as low as 12,000 rupees yearly, not monthly. But that's the problem. This product is good for you and it isn't high margin for the company. And that's why it's prescribed as unnecessary by the ones who missell. Just buying a term life insurance policy and doing an SIP with the remaining amount leaves you significantly better off than the all-in-one proposition of many insurance products. But that's not all. The investment part of such products is also a poor deal. Many times you're promised a deal that would either 2x or 5x your investment. And it actually does. But if you sit down and calculate the internal rate of return, which by the way isn't as easy as finding the annual return, you would see that most these investments barely perform the bank FD, which has an IRR of 5 to 6%. For example, would you invest 5 lakh rupees yearly for 17 years to get 10 lakh rupees yearly for 25 years? Think of it. You're getting double the money for a longer duration. Win-win hai na? Many people would be sold at this proposition. But in reality, this is just misselling via framing. Meaning, someone presents the same information in different ways which influences your choices. If you use Excel or a financial calculator to find the IRR of this product, you would get a number just under 5.2%. If I say you'll make 6% yearly and get 1 crore tax-free at retirement, you would say, well, in that case, I might as well invest in a mutual fund and get 10 crores at retirement. It doesn't matter if I pay taxes on it. That's the magic of framing. And you know the worst part? Many products even have restrictive lock-in periods. For example, certain policies disguised as investments will lapse if you don't pay your premium. You will face restrictions like being unable to get your own money back for 5 years. It would only earn a return of 4 to 5% for these years, and in the end, your money would be subject to a bunch of penalties and fees before being returned to you. Extremely different from discontinuing your mutual fund SIP, right? The SIP can be paused. It does not penalize you if you choose to stop it. Ideally, it always helps to not seek out all-in-one investment products and not mix insurance and investments. But you know, all of this is easier said than done. In reality, an S&P report said that nearly 76% of Indians, or 3 out of 4 of us, are financially illiterate. And this is exactly why it's so important to educate. Every time someone tries to sell a financial product to you, read each and every part of that document and ask 100 questions before you put your hard-earned money into it. Because honestly, that's the only way you can ensure that your investments work for you and not anybody else. Have you ever been missold in your life? Share your story in the comments below. And if you learned something new, leave a like and subscribe to Personal Finance TV. I'll see you next time.